Good morning, everyone. Welcome to Opportunity Asia, Destination Hong Kong, Growth Opportunities in the New Era. I'm Michael Lawrence, Chief Executive of Asia House, and we're delighted to be back in Dubai and producing today's event in partnership with Invest Hong Kong. Today, we'll be exploring the rapidly growing trade, investment, and business links between Asia and the Middle East, and specifically between Hong Kong and the GCC. Now, we've been tracking this at Asia House for a number of years through our Middle East Pivot to Asia research. And it's clear that this trend is accelerating and it will continue. It represents a profound reshaping of trade and investment and commercial opportunities. Hong Kong is undergoing a reboot, having emerged from the pandemic with a determination to reset and restate its position as a global financial hub, and in doing so, build new partnerships. Hong Kong itself offers opportunities. It's a vibrant economy. Growth is forecast at 3.2% this year, which is a bit lower than earlier forecasts, but still represents a very strong bounce back from 2022, and compared with Europe and the UK, for instance, very strong growth numbers. And Hong Kong is, of course, a major capital market. Hong Kong serves as a bridge for the GCC investment into mainland China and wider Asia. It used to be called a super connector in an increasingly fragmented global environment. Now, we have a superb lineup of speakers with us today, and we're exploring two core themes: Hong Kong's financial services and also Hong Kong's technology ecosystem, especially in relation to sustainable growth. Our special guest and keynote speaker is Joseph Chan, the Undersecretary for Financial Services and Treasury of the Government of Hong Kong. In a moment, I'll invite him to the stage to make his opening remarks. And after his speech, he's kindly agreed to join me here on stage for a question and answer session where we can explore a little more deeply some of the issues he raises in his remarks. But first, to offer his welcome, I'd like to invite to the stage Jimmy Chang, Associate Director General of Investment Promotion at Invest Hong Kong. Jimmy.
Joseph, Michael, distinguished guests, ladies and gentlemen, good morning. It is my great pleasure to be here in this magnificent city of Dubai. A big and warm welcome to you all to this momentous occasion where we are gathering together to explore and forge ties between Hong Kong and the member states of the Gulf Cooperation Council. GCC countries are Hong Kong's valued trade and investment partners. In year 2020, merchandise trade between Hong Kong and the GCC amounted to $13 billion. In the same year, the UAE-Hong Kong Investment Promotion and Protection Agreement came into force, strengthening investment flows between the two economies. And our relationship was taken to the next higher level in 2021 when the first Hong Kong Economic and Trade Office in the Middle East region opened in Dubai to strengthen Hong Kong's economic, trade and cultural ties with the GCC. So the prospects for collaboration between Hong Kong and the GCC are vast. Under one country, two systems, Hong Kong not only enjoyed tremendous support from our motherland, but also many unique business advantages that connect us seamlessly to the world, including our status as an international financial, shipping, and trading center, our common law legal system, as well as a very open and free economy. So investors from the Gulf can find unlimited opportunities in Hong Kong, which is also the perfect gateway for you to access the Guangdong, Hong Kong, Macau, Greater Bay Area, GBA, the whole of mainland China, and Asia Pacific. So under China's 14th five-year plan, Hong Kong will continue to strengthen its position in four traditional sectors, including finance, shipping, trading, as well as legal and dispute resolution services. Meanwhile, Hong Kong is also tasked to develop 4 new areas, namely aviation, innovation and technology, trading of intellectual property. Last but not least, cultural exchange between the East and the West. And in fact, we are already seeing increasing business opportunities in these 8 areas in Hong Kong. Despite our robust fundamentals and growing opportunities, the Hong Kong government is committed to continuously enhancing our business environment. The current term government has already introduced quite a number of new policy measures to attract quality companies and talents. For instance, we have established the Office for Attracting Strategic Enterprises to attract leading-edge technology companies to set up in Hong Kong by offering them some bespoke and impactful incentives. And to attract talents, we have introduced the Top Talent Pass scheme, whereby graduates from top universities around the world and some high-income earners can apply for a 2-year visa to come to Hong Kong, see for themselves without the need of having any job offer in advance. So far, global companies and talents have responded positively to these new measures. As the government agency responsible for foreign direct investment, Invest Hong Kong takes pride in attracting and supporting quality companies from around the world by offering you our customized and free of charge business facilitation services. So myself and my colleagues based in Dubai are really looking forward to getting connected with you and helping your businesses expand and flourish in and through Hong Kong. So taking this opportunity, I would also like to express my sincere gratitude to all speakers today, our participants, and Asia House, our event co-organizer, who have altogether made this event possible. So may this gathering serve as a catalyst for more new ventures, our enduring friendships, and a prosperous future for Hong Kong and the Gulf. So with that, I wish you all a very fruitful discussion today and a very successful business journey ahead. Thank you so much.
Thank you very much. Well, I'd now like to welcome to the stage our keynote speaker, Joseph Chan, the Undersecretary for Financial Services and Treasury of the Government of Hong Kong.
Michael, Jimmy, distinguished guests, ladies and gentlemen, good morning. I'm very delighted to be here today to share with you the latest business opportunities in Hong Kong and how together we can benefit from a growing economic connectivity between Hong Kong and the Gulf Cooperation Council's countries. The GCC encompasses some of the most forward-thinking and fastest-growing economies in the world. No matter you are investors looking for opportunities for investment diversification, or you are entrepreneurs looking for funding and business partners, Hong Kong is well positioned to act as a central hub to connect you from GCC countries to those from China and Asia. As Asia's leading international financial center, Hong Kong leads various league tables in the region across bond issuance, insurance density, cross-border wealth center, hedge fund business, etc. Under one country, two systems, Hong Kong's core competitiveness includes free flow of capital, common law system, simple and low tax regime. While under one country, Hong Kong offers preferential access to the mainland markets, including Stock Connect, Bond Connect, mutual recognition of funds, etc. The theme of today's conference is growth opportunities in the new era. To capture growth opportunities, one has to build its business first on a stable, robust, and secure financial platform. Free flow of capital in Hong Kong and the free convertibility of Hong Kong dollars are guaranteed by basic law, our constitutional documents. Our linked exchange rate system has always been operating smoothly since established 40 years ago. which is backed by our foreign reserve, currently standing at around 410 billion US dollars, equivalent to about 1.7 times of our monetary base. Our decades-long track record in financial stability and firm commitment to free flow of capital are the key difference between Hong Kong and other Asian economies. Hong Kong strives in its role as a super connector between mainland China and the rest of the world, as well as the significant role it plays in the Guangdong, Hong Kong, Macau Greater Bay Area that Jimmy mentioned early on. With a population of over 86 million and a GDP of about 1.7 trillion US dollars, the Greater Bay Area is one of the most dynamic and fast-growing regions in the world. It is committed to innovation, reform, and also achieving high-quality growth. With its unique position, our proximity, and the country's policy support, such as the Wealth Management Connect, Hong Kong can be leveraged as the gateway to the business opportunities in the Greater Bay Area. Hong Kong is Asia's asset and wealth management hub, with asset under management, AUM, amounted to about 4 trillion US dollars as at the end of last year, an increase of about 30% across a 4-year period. Hong Kong is the biggest cross-border wealth center in Asia, and Hong Kong possesses the biggest population of ultra-high net worth individuals as a city in the world, where New York and London came second and third respectively. We offer tax exemption for single-family offices, and we offer tax exemption for carried interest from private equity funds. We welcome companies and investors to make use of Hong Kong for connecting to funds and investment opportunities in the region. We embrace the opportunities provided by fintech development. At the moment, there are around 1,000 fintech companies and startups operating in Hong Kong, including 8 licensed virtual banks and 4 licensed virtual insurers. And we are home to over 10 unicorn companies. The city is a base for more than 600 private equity and venture capital firms, including 15 of the world's 20 largest private equity firms here in Hong Kong. So we offer fintech companies tremendous access to potential investors, customers, and business partners to help them start up and scale up. Last year, we issued a policy statement on development of virtual asset in Hong Kong, setting out our vision and policy direction. The policy statement has been well received by the industry, with many virtual asset-related overseas and mainland companies looking to establish their presence in Hong Kong. These companies span a range of sectors, including virtual asset exchanges, blockchain infrastructure, network security, virtual currency wallets and payment companies, as well as projects focused on building the Web3 ecosystem. From June this year, we have put in place a comprehensive and balanced licensing regime for virtual asset service providers. Our guiding principle is to allow virtual asset innovations to flourish in Hong Kong in a sustainable and responsible manner, under the principle of same activity, same risk, same regulation. In response to recent market development, we have planned to further enhance our regulatory framework, as announced in the Hong Kong FinTech Week earlier this month. First, expanding regulatory remit to cover buying and selling of virtual assets beyond trades taking place on trading platforms. Number 2, enhancing clarity for the market with regard to tokenization. Number 3, conducting consultation regarding regulatory regime for stable coins. And number 4, consulting the industry about the Hong Kong Monetary Authority's guidance on banks' provision of digital asset custodian services. We would like to connect the fintech ecosystem of Hong Kong and the GCC countries for further business development and expansion together. Besides virtual assets, green and sustainable finance is another growth area. Indeed, Hong Kong is already the largest center for issuing and arranging green and sustainable bonds in Asia, topping the league table last year and accounting for 35% of the Asian market share. Including both bonds and loans, the total amount of green and sustainable debt issued in Hong Kong last year amounted to 80.5 billion US dollars, registering an increase of over 40% from the previous years. To lead by example in combining green and sustainable finance and fintech, February this year, the Hong Kong SR government launched the world's first batch of tokenized green bonds issued by a government. It brings together bonds, other related financial instruments, and participants on one single digital platform to enhance the efficiency of the entire process and largely reduced the time required for the issuance. We would like to invite GCC business partners to leverage on our green and sustainable financing platform to channel private investment to support the green transformation of GCC economies and to combat climate change together. Ladies and gentlemen, there is a wealth of opportunities for the GCC and Hong Kong to cooperate and collaborate. Today, I'm pleased to be able to share some recent progress in connecting our two regions. We will shortly be welcoming Asia's first ever exchange-traded fund investing in Saudi Arabia to be listed on the Hong Kong Stock Exchange. This is certainly a milestone signifying more two-way fund flows and an important step toward mutual market access between Hong Kong and the GCC countries. On cross-border payment, the Hong Kong Monetary Authority, together with 3 other central banks, namely the Central Bank of the United Arab Emirates, the Digital Currency Institute of the People's Bank of China, and the Bank of Thailand, as well as the Bank for International Settlement Innovation Hub, are conducting a project named mBridge, researching on the application of wholesale central bank digital currency. The project completed the pilot phase in third quarter this year, with 20 banks in 4 jurisdictions participating. Next, we will examine with the rest of the project team on providing an option for the central banks to use CBDC to improve the pace of cross-border payments. Ladies and gentlemen, together we can achieve great things for Hong Kong and the GCC. I have every single ounce of confidence that Hong Kong and the GCC countries, building on partnerships, will continue our rewarding cooperation, creating stronger business networks and opportunities. I look forward to the upcoming insightful panels of renowned speakers and connecting with you all during the day. Now we'll go for the Q&A session. Thank you very much.
Undersecretary, thank you very much. I want to start with, I guess, what I'm terming and others are terming the reboot of Hong Kong, post-pandemic, huge number of changes, new chief executive. What's been the response internationally to that? And are you getting the traction in, I guess, re-establishing Hong Kong as the global financial hub that it was pre-pandemic?
Yeah, well, to begin with, I would say that during pandemic, of course, we were hammered by a pandemic for business travel. But if you look at the numbers, I think as a financial center, we fare very well. As I mentioned, the AUM of our SM Wealth Management business grew by about 30% across a 4-year period. If we look at green finance, green and sustainable finance, the total amount of green and sustainable debts issued last year was actually about 5 times of that 2 years beforehand. So if we look at fintech, I mentioned just now we're 1,000 companies. If you look at a few years ago, this number has doubled already. So despite the fact that there are less business travel, I think in terms of numbers, we're doing quite well. What we have done so far this year is, of course, as the border has reopened, we try to engage more business leaders from around the world so that they can come and see, because after all, seeing is believing. Although their staff on the ground do see the opportunities. In fact, let's say the FinTech Week that was just held a few weeks ago in Hong Kong was very well received, with about 30,000 participants attending. Just last week, we have the Financial Leaders in the Investment Summit being held in Hong Kong, where over 300 leaders, including a lot of chairmen and CEO of the global financial institutions, gathered in Hong Kong to attend that summit. So I think the traction is back. People know about the opportunities, and also they're excited about the fact that as China has reopened, they can use Hong Kong to capture those opportunities.
You have a very comprehensive opening speech, but one thing you didn't mention was the internationalization of the RMB and what role Hong Kong can play in developing trade and business around RMB. Give us a sense of where you see RMB internationalization and Hong Kong's role in that.
Sure. Well, indeed, right? China is now the 2nd largest economy of the world. So in terms of adopting the offshore renminbi for more investment and trades, that comes very naturally. And Hong Kong, as the international financial center of China, of course, would play a very crucial role in the path and the journey of the internationalization of renminbi. At the moment, we possess about talking about 1 trillion, or at the moment we possess about the biggest. At the moment, we possess the biggest pool of offshore renminbi liquidity in the world. And then at the same time, we process about 75% of the offshore renminbi payments of the world as well. So we are well positioned to promote different type of offshore renminbi instruments. In fact, bonds, funds, equities, insurance, all these products are available. One thing I would like to highlight is that in the Middle East and the GCC countries, we see that a lot of infrastructure projects are going on. They need financing. And a lot of those, they actually do co-investment with some mainland counterparts. So in those situations, a lot of those, they prefer offshore renminbi transaction as well. So that's where Hong Kong comes into place, to do offshore renminbi bond issuance, to do offshore renminbi loan syndication, so on and so forth. So we see that this number has been growing strongly, and definitely will continue that journey to support the internationalization of offshore renminbi.
Well, we've been doing our own research at Asia House, and we've found that trade settlement in RMB has gone from about 2% of total trade to 6% in just the last few years. It now outstrips the euro. I mean, obviously the US dollar is still dominant. There's clearly a trend there where Hong Kong can play a role in developing commercial opportunities. Yeah. I'm going to move now to the Hong Kong as a capital market. The capital markets traditionally have been the sort of centerpiece of Hong Kong, but it's been a fairly tough year for the markets this year. Volumes have been down, IPOs are down. Why is that, and will it bounce back?
Well, to begin with, right, Hong Kong is always one of the premier financing center in Asia. If we look at the IPO last year, 2022, fundraised through IPO in Hong Kong, actually we ranked number 4 in the world. Number 1 and 2 are Shanghai and Shenzhen, but of course they are in mainland capital control system. Number 3 was Nasdaq in the US, and number 4 was Hong Kong. So traditionally we always rank like top on the league table. Well, for the last year or so, I think a couple of challenges that we face. One is the fact that US dollar has strengthened with recent interest rate. People might see that, oh, the local Hang Seng index dropped. However, as one may appreciate, over 80% of the Hang Seng index were actually Chinese companies.
Yep.
So naturally, even if the earnings and the valuation do not change in renminbi terms, but given we use Hong Kong dollars for calculation, which is linked to US dollar. So when renminbi fell against US dollar, then on the surface, the index level dropped as well. So that's one challenge we're facing. And then the other challenge that we're facing, of course, is the fact that while China has reopened, the growth number is not as strong as people had expected. At the moment, China is projected to grow at slightly above 5%, no longer like the 6 to 8% per annum that we used to see. So I think the market has to get adjusted to that. However, in the medium long term, I'm very confident for very simple reasons. First of all, a 5% growth of the second largest economy is still a very strong growth as compared to other developed economies in the world, including Eurozone, UK, or even United States. Secondly, I think this sentiment always comes and goes. By the way, my background is an investment banker, so I'm quite used to this cycle. If you look at Hang Seng Index, it was trading at around 16,000, 17,000 points at October, November last year, when people were quite discouraged by the fact that China did not open the border when the rest of the world has already opened. But once they changed the policy and reopened the border, within 3 months, Hang Seng Index went up by about 50% very quickly. So you can see that I think these days market comes and goes very quickly, but as long as the fundamentals sound, as long as the GDP numbers are there, I'm very confident that the market sentiment will change as time goes on.
Where do you see the most likely opportunities between Hong Kong and GCC cooperation, collaboration, and business interests? What sectors?
Well, I have to say that because I'm from the Financial Services and Treasury Bureau, so I'll focus on that area that's deep in my heart. Well, first of all, As I mentioned earlier on, financing, right? In this region, you have a lot of great projects, a lot of new projects for financing. On the other way around, there are a lot of investors, a lot of business partners in Asia, very eager to find out more, to learn more about this region. Again, pandemic has not helped over the last few years, but they heard a lot of exciting things about the plan different GCC countries have rolled out. So Hong Kong, as a super connector, as always, can bridge you guys together. And also, one more layer on top of that is that these days, most of the financing have to be on green and sustainable finance, because that's what the investors are looking for. That's what the issuers of projects promise the stakeholders as well. But then Hong Kong, as the leader in green and sustainable finance, can offer a wide range of services in that arena as well.
You mentioned the central bank meetings and the projects around digital currencies and the like, and I think Eddie Yu was here back in July, if I recall, and from what I understand, very productive meeting with the central bank here. Can we expect more senior officials from Hong Kong like yourself to be in Dubai to elevate the profile of Dubai in GCC over the next 12 months?
Well, absolutely. If you use, I think as an investment analyst before, I wouldn't use past performance to predict future performance.
Yep.
But if you look at the last few months, our chief executive has come to the Middle East. My boss, Secretary Hui, Secretary for Financial Services and the Treasury have come to the Middle East. Eddie Yu, our chief executive of Hong Kong Monetary Authority, our de facto central bank, has come here. And now I myself come, you'll see that within months, basically on the financial system and also our financial secretary has come to the Middle East a few months ago as well. So you can see that it's a region that's really high on our agenda, and we know that we need to bridge, we need to connect so that the opportunities could be explored and capitalized between the two business sectors. So that's already happening over the last few months, and no doubt it will keep going on for in the near future.
You mentioned some of the initiatives that have come out of the government to encourage business. Are there any more in the pipeline? What other changes can this group expect if they're looking at Hong Kong for commercial ties for investment?
When it comes into investment, I think there are lots going on. I don't think I have the time to spread all of them. But I think one particular focus I want to highlight is the fact that we are deepening our connectivity with the mainland and also with the rest of the world. With the mainland is that we always use what we call the Connect scheme so that we can have the access to the mainland capital and help them to invest overseas. Early on, you heard the term called Wealth Management Connect. Basically, it allows the retail investors in the mainland cities within the Greater Bay Area to invest in financial products offered by Hong Kong financial institutions. So it was the first time ever that China allows the local investors to invest in products issued offshore. And then with the Stock Connect and the Bond Connect, of course, we allow investors from both sides to invest in the stocks or bond listed in the markets on the other side. And early on, we actually enhanced the scheme so that for companies listing, for foreign companies with secondary listing in Hong Kong, they can be eligible to the Stock Connect, right? Meaning that the companies in the Middle East, in Europe, listed on Hong Kong Stock Exchange can, through Stock Connect scheme, get the capital from the mainland investors as well. So with all these deepened connectivity with the mainland, then we make Hong Kong more attractive for foreign companies to use our platform. And vice versa, we are inviting more companies or investment or issuers to come to Hong Kong. Early on, I mentioned the ETF, that investing in Saudi to come over. And also, we are working on a few companies potentially coming to Hong Kong for listing as well from the Middle East. So we'll continue to deepen our connectivity with the mainland and also the Middle East in that aspect.
You talked briefly about the Greater Bay Area and opportunities there. And there was a huge amount of excitement around it pre-pandemic. Brakes obviously put onto a very large degree during the pandemic. Is that now getting the traction, the attention, the investment that you expect? Is that now delivering the opportunities for investment?
Yes, indeed. And I think I'm expecting even more from where we are. Earlier on, I mentioned about Wealth Management Connect. It was launched just 2 years ago. Unfortunately, it was during pandemic. Earlier, a couple of months ago, we announced that we're going to launch a 2.0 version, meaning that we will widen the product space, will deepen the quota, and will allow more different types of financial institutions to participate. For example, we are now working with the mainland to offer what we call the after-sales service center for insurance companies. So traditionally, a lot of mainland customers come to Hong Kong to write their insurance policy with Hong Kong insurance companies. But then when they need to do the claims, when they do inquiries, when they pay the premium, do the renewal, they need to come back to Hong Kong again. But now we are on the principle that we will set up after-sales service in the mainland and Greater Bay Area cities so that they can do this with the Hong Kong insurance companies when they are in mainland. No need to come over to Hong Kong as well. The other example I can share with you is that just September last year, we announced the 18 measures between Hong Kong and Qianhai of Shenzhen to support private equity funds, to facilitate them to set up business in Shenzhen with facilitation to capture investment opportunities as well. So all these are very exciting developments just happened over the last 10, 12 months within the Greater Bay Area. And we're expecting more as the momentum gains as well.
Final question. We're in really unpredictable times at the moment, just generally the globe, stuttering growth in many countries, high interest rates, persistently high inflation, geopolitical tensions, the like of which I haven't seen basically since the 70s. So does that mean that the relationship between Hong Kong and GCC and other similar partnerships are even more important? And does that mean that Hong Kong will redouble its efforts to accelerate those sorts of partnerships?
Well, absolutely. As I mentioned about the visits from our government officials and also on the business sector level, all the increased intensity of exchanges and meetings, you can see that we are trying to strengthen our ties with the GCC countries, no doubt. There are many reasons, right? Well, first of all, as I said, in the last few years, in Asia, in China, and Hong Kong, we know the GCC countries have developed very quickly with your forward-looking and great planning. But then we lack the people exchange. Yeah. And so now we need to catch up on that. So that's number one. Number two is the fact that with the recent interest rate and also the fact that the global economy, some of the regions, some of the traditional developed economies are not doing as well. I see that both Asia, particularly mainland China in the region, and also GCC countries in the Middle East are doing fairly well above some other peers around the world. So I think as we are focusing and we are enjoying positive economic growth, we shall work together and identify more opportunities. And the other thing I want to highlight is the fact that a lot of new growth areas I mentioned, fintech, green finance, all these are exactly very elementary to the development of this region, be that infrastructure, be that trade finance, be that cross-border payment, improving the efficiency of trades and investment flow of the region. And that's exactly what we have developed in Asia as well, and that's something we can work closely together.
We have to leave it there, I'm afraid. Ladies and gentlemen, please thank Joseph Chan.
Pleasure mine. Thank you.
Thank you so much. So moving now on to our first panel discussion, and in this panel we're going to be looking at Hong Kong's financial services and the opportunities offered for GCC investors. Hong Kong is one of the world's leading capital markets, and it does offer that bridge between the rest of the world and China and wider Asia. But as I mentioned just earlier, the global picture is really challenging. Persistently high inflation, high interest rates, slowing growth in many developed economies, immense geopolitical tensions across a whole range of issues. So it makes the outlook unpredictable and markets volatile. The title of today's event refers to a new era. And there certainly is a profound shift happening, a new trading and business architecture being established. Asia House first identified this trend back in 2017 when we first published the Middle East Pivot to Asia research report, which showed growing links between Asia and the Middle East and predicted an acceleration in those ties. The next edition of the Middle East Pivot to Asia will be published in just a few weeks, and it will show trade between the GCC and emerging Asia soared almost 35% over the last 12 months or so. And at this rate, trade between the GCC and Asia will exceed trade between the US, the UK, and Europe combined by 2026. So GCC trade with Asia will exceed trade between the GCC and the US, UK, and Europe in just a few years' time. So what opportunities can Hong Kong offer in this context. We're going to explore this from several different perspectives. Two of our panel speakers are based in Hong Kong, and they've kindly travelled here today to share their insights on the economic outlook and the investment environment there. And we have two Gulf-based speakers who will look at Gulf investment interests in Hong Kong and the wider region, and the investment and business trends across that Gulf-Asia corridor. So please welcome to the stage now my panel. Andy Poon, Hong Kong CEO of First Abu Dhabi Bank. Patrick Bowes, who's Chief Investor Relations at Prudential PLC. And as I said, both Patrick and Andy have flown in from Hong Kong, so if they're a little jet-lagged, that explains it. Shada El Borno, Managing Director of MENAP, Regional Head of Global Subsidiaries at Standard Chartered. Shada, please come on up. And Salman Mir, who is Senior Director of Corporate Origination at Mashreq Bank. Please welcome my speakers. Patrick, I'd like to start with you. Prudential's an interesting case because you've pivoted very much to Hong Kong over the last 4 or 5 years. Moved a lot of your headquarters there, a lot of your senior executives there. What do you see in Hong Kong, and how is that developing in terms of sort of the shifting patterns of global trade and business?
Thank you. Well, yes, we have substantially moved our base of operations. In fact, we have less than 100 people left in Europe, which is quite an amazing change for a business that's 175 years old with its historic base there. And I was delighted to hear the messages from the previous speakers reinforcing, if you like, the logic which we were following from a strategic point of view, which is to take a view about growth and growth opportunity. Just to throw out a stat there, we believe there's $1 trillion worth of insurance opportunity in the markets that we operate, and we see Hong Kong as the hub of that. $1 trillion of insurance in the next 10 years in the markets that we operate. So we see an enormous opportunity for providing health insurance, wealth management, and development finance to the markets of Asia and Africa. And we took the view that actually, in terms of a central entrepot, has been espoused by our esteemed colleagues beforehand, we've got access to the right sort of intellectual and legal capital, if you like, in terms of certainty and capacity, which means that we can run the operations from there and then deliver the services to those 18 million customers in the rest of the world. And it's a logical connecting point for us and our businesses, both in Asia and in Africa.
Andy, your First Abu Dhabi Bank is one of 3 Middle Eastern banks in Hong Kong. What sectors are investors and businesses from both GCC and Hong Kong prioritizing from your perspective, sitting in Hong Kong as a bank from the region?
Sure. Yeah, I'm the CEO of Hong Kong, but at the same time covering Northeast Asia, which means Japan and Korea. Our business is really top-tier wholesale, corporate, and institutional banking. And for us, we have been really focusing on the Hong Kong or Northeast Asia and the GCCE flow in terms of investment, in terms of trade. And we are seeing a lot of that, going one way or the other. And last year, in the GCC area, a lot of projects, which is really up and coming. And plus, at the same time, I'm seeing a lot of interest that coming into Hong Kong as well to look into investment or trade opportunities. Yeah.
So you are seeing that corridor expanding.
Exactly.
Shada, I'd like to come to you.
Really
Standard Chartered, obviously huge in Asia, huge interest as well in this region. Are you seeing an acceleration of growth in that trade corridor, GCC?
Yes, absolutely. It has been there for a while. It is well embedded. The trade ties have been running deep for a very long time, and it's growing very strongly from here. It's a far more targeted approach that we're seeing, where there's cooperation in areas of mutual benefit in sectors and industries that are very much aligned to the country's visions and strategic plans. So the overarching theme is a very forward-looking view. And so with sectors like advanced technology, financial services, fintech, also both sides of the globe and the corridors, there's a very much entrepreneurial culture, and the ecosystem is very enabling towards that.
Yeah.
Another area that I've seen very big also is the whole research and development space, so that they keep coming up with new ideas and products that are well backed by deep research, and that will of course enable further growth in trade and investments. So it's definitely, it has been there and it's growing at a very steady pace.
Interesting. Salman, the same question. You're a Middle East bank with operations in Hong Kong. Are you seeing interest in the same sectors that Cheda just outlined? What trends are you seeing?
Well, absolutely. See, if you look at it, one of the main things that I noticed that was mentioned earlier on is growth. Now, if you look at growth, we have talked about some excellent numbers in mainland China. We have talked some excellent numbers in Hong Kong, and same goes for GCC. Now, when the rest of the world is struggling, you can see that these are the areas in the globe which are actually looking forward to more growth, and these are the exact segments. The only thing I would like to add on is, as the Undersecretary was mentioning, green financing and sustainable finance. So clean energy, whether it is in the shape of renewables, whether it is in the shape of hydro, whatever. So clean energy is something that a lot of focus is being put on, along with, of course, Internet of Things, artificial intelligence, and fintech, which is a combination of finance as well as the technology piece. So these are the themes that we are also seeing growing both ways, whether here in the GCC or in Hong Kong as well as mainland China.
See, and we're going to explore that in the next panel as well in a little more detail, the whole tech ecosystem and where it plays into fintech and sustainability. Patrick, back to you. Growth numbers in Asia are predicted to be much stronger than they are in developed economies, but China's economy is still not where I think China would like it to be, and certainly not at the optimistic end of forecasts. From the investment community's perspective, is that a concern, or will China bounce back? What's your outlook?
So I think the strong message about the next type of growth coming out from North Asia is going to be one of quality growth. If you listen to the regulators and the political power base, they're very focused on creating a sustainable path of the recovery post-COVID. And I keep reminding investors that whereas if their mindset comes from the Western markets, which have had 2 years of recovery from COVID, when I moved to Hong Kong, which is actually only a year ago, I was still subject to restrictions. And it's only literally in the last 8 months or so that society has opened up both in Hong Kong and elsewhere. So we're in a bumpy phase where you're not going to have a linear path of development. I think the CEO of a very large business called Yum described it as it's going to be a wave recovery, which I think is exactly right, where there's a tide, but there's a wave as well. And there are going to be periods of time where you hit a little bit of air pockets as things get settled, because you have you've got strains in logistical systems, which means that you don't get the smooth delivery that effectively 30 years of growth at the 8, 9, 10% that we heard from before was in the system, so the system was working well. But notwithstanding that, if you stand back and look at the long-term demographics, and for us, which is really exciting, is the development of, the pension markets in China in particular. So you've got a country which has brought 650 million people out of poverty in less than 40 years, which is a quite extraordinary development. And now those people are becoming to be middle-class citizens, and they're going to be looking for savings and pension savings for the future. And that's exactly the space that we want to play in with our partner at CITIC, which is one of the big SOEs in China. I think we've got to get people to look through a short-term horizon and look for the long term. And that obviously very much aligns with actually some of the sentiments in my experience of working with GCC investors, is that their horizon is just that longer period. So they want to look through to what it's going to look like in 10, 15 years. And that's where I see a very strong synergy between the development that we're hearing about today.
Andy, would you agree that GCC, one of the attractions is that it's looking for longer term investment, but also Hong Kong as a capital market, which has been one of the premier ones for many, many years, and clearly is likely to remain one?
Yes, absolutely. I totally agree with you. The reason is that there's the China advantage and the international advantage, all comes into one place. That is Hong Kong, and so therefore that is a place, where that is irreplaceable in the world. At the same time, coupled with what Joseph just mentioned, we have a common law system, and that is the only place practice in China and aligned with the other international centers. So overall, I think in the long run, definitely Hong Kong will be forging a lot of good relationships with their GCC countries. Yeah.
Shane, are your clients in this region looking more optimistically at Hong Kong and Asia, not only because of the growth record, but because we're now emerging from the pandemic and the world is shifting?
Absolutely. There's a lot of green shoots of that. Directionally, we're seeing a lot of investment already heading in that direction because, again, the opportunities that are being presented to them are very much aligned to that forward-looking view, which is very long-termish in nature, and because it offers them the diversification that aligns to their vision and country plans. So definitely it works for them in a very complementary manner, and those synergies are there.
Selman, you mentioned growth, and that's being one of the attractions, but there is a shift happening, at least we're reading it in the world, partly driven by growth, but partly driven by geopolitics and the fragmentation of world, more regionalization. Is this going to underpin this corridor? Is that going to drive and accelerate the growth of this corridor?
Well, obviously, yes. And as you would appreciate, I mean, sometimes in business, it is all about being in the right place at the right time. So maybe this is the opportunity for this region. So you see the growth happening from here, you see the growth in China, you see the growth in Hong Kong, the geopolitical situation, what's happening with Asia, with say US as well. As you mentioned earlier on, that the kind of business that will happen between this part as well as Asia will surpass US and US and Europe put together. So that in itself is a big thing. So when you look at the visit of the Chinese president and the chief executive of Hong Kong to Saudi, right after that, the amount of bilateral trade that has been actually signed up. I mean, these are the things that show you how people are very keenly watching this. And I think the most important thing is Hong Kong as an international financial center was always there. It was always there with the likes of New York and London. But the way they are evolving as well is very important in terms of embracing all the change that is happening and providing that super connectivity is the word that we used, into mainland China. So nobody actually denies what's happening over there. And to get access to that through Hong Kong, I think this is what people are really interested in finding out. So we see the sovereign wealth funds as well watching that space very, very keenly to see where else can they do investments in the region.
Patrick, is that super connected title, which has been around for a while, is that coming to fruition in Hong Kong? You've been there 12 months, Pru's moved out there. Is that one of the key advantages of when you look at Hong Kong?
Yes, indeed. I mean, as you mentioned, our senior management's now based there. We are running the group effectively from Hong Kong. That connectivity makes a big difference. And it's the old rule, the time zones actually work, right? Because you are actually able to run and manage multinational businesses with an Asia focus much easier from there than from other time zones. And I think we're seeing great opportunities for working together. One of the big, our new updated strategy had shown that we want to work across borders. And that means that you develop centers of excellence. Could be in the health space, for example, where Hong Kong and Singapore are very important health markets for us. We want to take the learnings of how to run a really good health business and develop that and export that effectively into other regions, both inside Asia but also in Africa ultimately. And you can only do that, if you like, if you've got your hub in one of these core connector hubs. So the super connectivity we're seeing in coming to fruition, you know, as I watch it develop in front of me in the business as it develops, you can see that it's much more efficient to run your business from a super connector hub. You just get those economies of scale through the system, which you can't get elsewhere.
Andy, I mentioned to the Under Secretary, and we talked about RMB internationalization. How important is that in your business in Hong Kong? And is that one of the platforms on which you're going to drive more business through your Hong Kong office, through your Hong Kong
yes,
operations?
absolutely. Yeah. Definitely, renminbi internationalization is on the top of the government's agenda, because that is also the strong support from the central government in the 14th five-year plan. And as you can see that, you know, Hong Kong has done a lot in terms of all the Connect schemes and everything, Stock Connect, Bond Connect, Spot Connect, and to internationalize the currency. But from our perspective, I can also see that, you know, the trade side, you know, that is also really picking up in terms of using the renminbi. And I can see that going forward, that is definitely the way to go. And so therefore, in terms of GCCE and also Hong Kong or even China, using the renminbi to do this trade settlement or project financing. You know, that will be the future trend. Yeah.
Yeah. So same question to you on the RMB, the trade as a trade settlement currency, as I mentioned earlier, it's increasing at an extraordinary rate, really. Are you seeing that? And are you seeing an appetite for settling trade in RMB?
Correct, and I think that's mirrored in the advancement and ranking that Undersecretary Joseph mentioned, right? That it's moving up slowly and it's catching up nicely with the euro. The governments, I think, are also doing a fairly good job in advocating and pushing for that and facilitating trade and investment underpinned by the RMB. So a lot of effort and focus in there. And again, I allude to the fact that it plays very nicely to this ambition and strategic desire to diversify ways of doing things. Everyone's looking for a differentiated way of doing business, and it so offers that.
So the same question to you, the RMB and the role it will play in developing this trade corridor.
Well, see, it is so important because if you look at the way the interest rates are at the moment, and if you see the differential between dollar and RMB at the moment, and Hong Kong being the only place where you can actually raise offshore RMB liquidity, so it becomes very, very important. And I would say actually on the flip side as well, we have now seen a bit of a trend that investors from that part of the world are looking for liquidity here in the Middle East. So I've actually seen some big mega corporates actually tapping into the pool here. Now, they are not short of liquidity there, but they also understand the importance of this region. And the reason they want to introduce themselves in terms of raising liquidity here, so making themselves known, whether it is through private credit, whether it is through syndicated facilities. So that tells you that understanding and maturity of this market is really being appreciated by the investors over there as well.
So it's happening here as well, that shift in thinking, that shift in products being used, et cetera.
Exactly. So that's why people are really interested so that they can introduce themselves to this market, that yes, we can raise liquidity in the West and we can raise liquidity in Asia as well. But now I think they appreciate this market maturing as well. So that is why they're tapping into liquidity here.
Yeah. It's growing at a steady pace. We're seeing it, even the SWIFT data shows like a steady increase in RMB remittances going from here, from the region.
That's interesting. Yeah, that's what we've been monitoring, the SWIFT data, and it shows RMB as trade settlement just rising on a very, very sharp curve. By the way, very happy to invite the audience to ask questions of our panel. So please, if you wish to ask a question, just let me know. Just put your hand in the air and we'll bring around a microphone to you. Before I do that though, Patrick, you've been in Hong Kong 12 months. Have you seen a dramatic change in that 12 months? Because you've gone through landing quarantine to now being able to go back from here without quarantine. Yeah. And so there must be quite a difference in that 12-month period.
Yeah, so I've been in the group now for 4 years, so I've seen all the way through the history in terms of that. And I think the very tangible experience is, I live in Kowloon, is the very tangible experience of seeing the mainland visitors coming to visit and walking down the Avenue of the Stars. And you can feel thus the resurgence. You can just feel it, and it's a very emotional moment, I think, for Hong Kong, is to feel that they're back, and things are working through again. I can see all of a sudden we got the investor community traveling again. I think Undersecretary mentioned the HKMA event last week. Very high turnout of some of the biggest global financial institutions. This time last year, you didn't have the same turnout. But this year, you absolutely did, which I think sends a big signal about the world's moving on from that past. And I'm seeing investor interest increasing. They want to be sure they understand the dynamics going around them, but very much so. There's a lot of engagement now with international markets looking at stocks and bonds effectively being issued by. Underneath this is economic growth, right?
Yes. Yeah.
And that's a better credit. Economic growth is probably, sensible economic growth is probably a better credit than other credits that I can think of that we can't mention, right?
Yeah.
You've got $1 trillion of interest. Blimey, that's quite a lot of. So there is a big macro shift going on in economic power, and I think people are beginning to say, give me some stability and I will get there.
Yeah, because that stability piece is key, and Hong Kong's riding on its stability. Questions from the audience now. There's one over here, Vasuki.
Thank you, Michael. I'm Vasuki Shastri from Gatehouse Advisory Partners in London. there's a vast pool of investable capital in this region through the sovereign wealth funds. And those flows have, at least in the past, headed west. That is correcting now with a lot of focus in emerging markets. Now, what kind of a role can Hong Kong play as a co-investor to capture some of these flows, particularly those going into Asia?
Shannon, can I start with you? The sovereign wealth funds looking more at Asia. What role can Hong Kong play?
It can play the role that it's currently playing, which is a huge enabler and facilitator, right? To direct those investments in the sectors that are important. I think something that's very important, super connectivity, you mentioned that word. I think it goes a long way because it builds on the fact that not only like a country like Hong Kong and UAE are very nicely placed as gateway and linkages to very important regions, but just amongst themselves, that connectivity that is there, built on very solid and long-standing partnerships, allows for exchange of knowledge, experience, information, and sort of advice in terms of what direction the investment should go towards. And so, it depends on the key industries that, the industries that are key to Hong Kong, where it requires the expertise, for example, of the sovereign wealth funds, in addition to their capital, to be directed towards that. So I would say probably the whole energy transition space, the whole renewable space, advanced technology. I know both of them are very young and very keen on all that is smart city, advance and pushing towards direction. So these will probably be the areas.
So you were nodding there, Andy. Do you see that as energy transition, technology, smart cities, where sovereign wealth funds are looking to Asia and Hong Kong can play a role?
Yeah, I would say so. I think that is what Hong Kong government is trying to also push in the long run as well, in the innovation and technology space, and also sustainable finance, renewable energy. And that will be the area that we can have traction, and that we can really support and forge the relationship between the GCC and also Hong Kong.
Yeah, that's what I'm saying to you. I mean, you mentioned earlier renewable energy and renewables as being one of the cornerstones of this relationship.
Well, I think that's so important. I mean, coming back to this question particularly, that sovereign wealth funds, of course, are looking towards Hong Kong to facilitate the process of investment into mainland as well. So I think that is very important to understand. As was mentioned earlier on, the benefits that Hong Kong brings, being the only place which offers common law in the greater China area. So that is very, very important, gives comfort to the investors. The IPPAs that have been signed between Hong Kong and UAE, and Hong Kong and Kuwait as well. So of course that gives a lot of comfort to people, so they can actually delve deeper in, by staying there in that market, understanding what are the other opportunities available in mainland China as well. I myself was there about 3 weeks ago, and I can tell you, if people haven't been there, it is a very, very different notion that you have. Once you are there, you understand how much is happening. You go to places like Beijing, you go to places like Shanghai, and you understand the vibrancy that is there and the kind of businesses that are happening there. So definitely the sovereign wealth funds are watching that space very, very keenly for several reasons that we've discussed earlier on, and Hong Kong will definitely have a very important role to play.
Yeah. Same question to you, Patrick, the whole sovereign wealth thing, because there's massive amount of capital being deployed.
Exactly. I was just overnight in touch with my global chief investment officer, asking, kind of what's available. And obviously, as a large insurance company with a long-term horizon, we're looking for long-term return participations. And actually, Hong Kong is, because of its intellectual, legal, and skill capital, effectively for North Asia, is able to help run these projects. So Vietnam would be a market, so the decarbonisation of Vietnam and also Indonesia. These are logical markets which need capital. It's organised in Hong Kong, and you're looking for co-investors of people that are local. And obviously the large insurance companies were natural partners for that. So I think it's the confluence of all of that means that Hong Kong's got a great opportunity to capture, if you like, that opportunity by being the sort of the powerhouse of this really, really important evolution, if you like, in global economic power base.
Okay, thank you. Next question from the audience. Over here, please. Oh, got it. All right, thank you.
Hello.
You're on.
Good morning. This is for the entire panel. So first of all, thank you so much for your insights. I want to turn the question around a little bit with the theme being investments moving from Asia, Hong Kong and China into the GCC, right? So that's, and I'll break down my question into two parts. One, what particular industries are we seeing investments moving in from Asia, be that Hong Kong, China, into the GCC? And have you seen a change in risk appetite as a result of recent developments in the region? And has there been an impact in terms of the expectations from investors in terms of the yields they're getting as a premium based on a slightly higher risk profile of the region? Thank you very much.
Let's start with the Gulf-based participants here. Are you seeing?
Well, see, we are definitely seeing a lot of investments coming into the region. Renewable energy, we keep repeating the word again and again, but I think that is the theme. That is in terms of tying it up with sustainability, whether it is in the shape of solar. I mean, as everybody is aware, China being the largest producer of solar panels, and Saudi, for example, being the cheapest producer of solar energy. So there's a natural, kind of a marriage that happens there. And similarly here in UAE as well, the rest of the GCC, with the shift away from hydrocarbons, this is the area where everybody is focusing. And this is where we see a lot of investments. As I was mentioning earlier on, I was in China, and most of the customers that I met there were asking questions around this particular industry and how can they participate and come over here. You're right, of course, risk premium is there. At the end of the day, it's a game of return versus what kind of risk people are taking. But the good thing is that the risk rating itself as well is improving for the region overall as well. So people do understand that, and it gives them the diversification as well. And at the back of the geopolitical situation that's happening across the world, especially vis-a-vis China and the US, for example, and what's happening in Euroland, where there are not a lot of opportunities, naturally the shift is to come to this part of the world. And then you add on other areas like IT, you talk about IoT, you talk about artificial intelligence, you talk about smart city development. So these are all the areas where people are really, really keen in terms of looking to invest. Apart from that, manufacturing is also something that very keenly is being watched, whether it is in North America, particularly in North Africa, particularly in Egypt. And UAE, of course, always has its significance as a re-exporting hub as well. So people are watching that space. I know a few companies who are actually establishing their regional head offices over here to actually tap into the opportunities being offered in sub-Saharan Africa. So it becomes a natural conduit from UAE into that area. So I think these are the areas where people are really focusing in terms of their investments.
Correct. Yeah, I second what Salman is saying. So there is, of course, the traditional energy sectors where investments have been there, and these remain intact and in place for now. There's the renewable space, there's manufacturing, which is a key strategic focus area and direction for the countries here in the region. Saudi, for example, is now big on the mining sector and space, especially the mining that is helping the energy transition, and logistics. In terms of are we seeing premium, there's not much geopolitical premium per se. And I think slowly there is that ability to differentiate and distinguish the different countries within the region, even though we're one block. So that education and that awareness is still getting better.
Andy, you seeing?
Yeah, I'm also seeing the same thing as what you guys see from Hong Kong, because you guys will be inbound and we will be outbound. We'll be bringing the clients, to the GCC. And there's still a pipeline of deals, that are looking into projects in the UAE and in the Saudi Arabia and even Egypt. Touch on renewable energy, solar, and also logistics. Yeah, and I don't see that there's much difference in terms of risk premium or whatsoever. And actually, I'm seeing some clients who are interested to do loan syndications in these markets, probably because of the strong liquidity in the GCC, and plus at the same time, the interest differential of the US dollars as compared to this market. So therefore, we are really, really seeing a lot of opportunities and flows between the two sides of the globe.
Yeah. Patrick, you've seen the same trends. It seems to be unanimous here, but this is happening.
Yeah, I mean, I have a slightly different aspect. Obviously, from an anecdotal basis, I would think that there are areas like hospitality and tourism which are natural markets, which Hong Kong is extremely good. If you look at the restaurant sector in Hong Kong is extraordinarily deep and rich, and so is it in Dubai. I think there's probably going to be, and I'm already hearing about strong linkages between hospitality groups. Tourism is an absolutely obvious one that should be very, very popular. For us, we are very keen on an East Africa hub. So for us, we're looking at transportation links at facilitating movement of people. So our hub in Kenya, we fly people in through Dubai because that's the best way of getting to Kenya. So we run, to Osama's point, we run our logistics effectively for our insurance world using some of the technology and some of the capacity that there is in terms of this international trading hubs. If you think about it, there's a huge similarity between the history of Dubai and the history of Hong Kong, and there's a natural, easy, I would imagine there's a natural, easy working, natural rhythm that will come to the fore, which will give people confidence, I think, in investing in, if you like, higher technology group, and also this hospitality sector and tourism, I would say, would be two that I would highlight.
Okay.
Thank you very much. I should have introduced myself. My name is Ramsey. I represent Maybank Islamic in the region. Thank you.
Okay. Next question from the audience. Over there, please.
Hi, thank you very much. This is Kelvin from One Degree, Hong Kong virtual insurer. And my question is actually related to AML and KYC. Currently, UAE is still being listed as a grey list country on the FATF. So from the bank perspective, do you really see this as a challenge, and how does it impact the investment and capital flow between Hong Kong and UAE? Thank you.
Well, I think the last I was reading that FATF is actually considering upgrading UAE, so that of course is the step in the right direction. And I think so far all the regulators have acknowledged the fact that yes, all the steps that have been taken, not just by UAE, but of course within the region as well, they are moving in the right direction. I think it was mentioned earlier on in terms of the central bank, the digital currency that has been tested between the four countries using the regulators and whatnot. So these are all the steps which are, of course, in the right direction. And at the end of the day, of course, this is a moving process. The good thing is it is moving in the right direction.
Correct. Yes, we're seeing, absolutely, there's momentum in the right direction. There's learning in all of this, and they're progressing transparently towards, greener pastures.
Yeah, I agree. You see? Okay. Next question, please. Down the back. Thank you.
Good morning. My name is Macklin. I'm from Fishtay & Co. It's a law firm in Dubai. My question is with respect to banks both in UAE and Hong Kong, the approach towards virtual assets. I heard the previous keynote speaker saying that there's no regulatory restriction on banks dealing with virtual asset providers or trading platforms. But on ground, on the practical side of it, at least in UAE, it's not as flexible or not as full-fledged as it should be. So I want to know how Hong Kong actually is trying to, because I understand that this regime is still new and it's only introduced into 2023. So is there any practical guidance that the panel could provide, or any guidance in this regard would be helpful?
That's a really good question. That whole regulatory piece, I think, is a substantial, potentially impediment trade, not in this particular instance, but the regulatory framework in Hong Kong and how it compares with the Gulf, and the inflexibility, as our questioner just said.
I think one thing that has been very rightly said, that this is very, very new and it is still evolving. So from a bank's perspective, we can say that we very much align ourselves with whatever the regulator tells us to do, and we actually operate within the framework that has been set up. Now, because this is a space, this is so brand new and it is evolving as we speak, we will always be guided by whatever the regulators tell us to do.
Correct. That's the only way to answer it.
The Hong Kong perspective.
It's the same thing, yeah. I would
Okay.
say so, yeah.
Okay, so they're not going into much detail about the regulation here.
Yes.
That makes sense. But if you want to talk about Hong Kong regulations, I assume that the Invest Hong Kong people can put you together with the right people. And we have the Undersecretary here. I'd lobby him. He's sitting at the front. So next question, please. Down here, please.
Thank you. My name is Jo Litt, and I'm from a law firm based in Dubai called Ibrahim & Partners. This is the question in response to Patrick's comment about Hong Kong is the hub for skills and capital, and Hong Kong has a capability to put deals together. May I ask our speakers to elaborate more on this point?
So Patrick,
Sure.
yeah.
So in our insurance world, there's a particular discipline called actuarial science. And it's a fundamental building block of being able to price risk. We've talked about risk premiums. How do you price risk? And within Hong Kong, there is a especially strong group of local capability and international capability that's come to work that is able to help price this. So, for example, Hong Kong is able to provide access to global reinsurance that is not available in other markets in North Asia. So we can route reinsurance using Hong Kong that we can't get elsewhere in the group. So we can run in our own risk. So that's just one example. I would give you another example. My sister's an intellectual property lawyer. She worked for 5 years in Hong Kong. Lots and lots of people that I play hockey with are all intellectual property lawyers in Hong Kong. There's this infrastructure of capability and human capital, which I think is massively important as you run a financial services industry. The access to lawyers and accountants, consultants for all their ills. You know, there is a human capital capability here and a very, very high education base, often will be trilingual, which delivers an incredible advantage for international firms wanting to be based there.
Andy,
Maybe,
you see the same?
yeah, great. You know, maybe I can add on, you know, as a general statement. I think the beauty of Hong Kong is we have a pool of talents, okay? And I think 5 of our universities are within that top global 100. So therefore, we have been training, we have been developing a lot of young talents. And not only that, you know, professional service is also very important, you know, for the Hong Kong economy. And not only in Hong Kong, but however, a lot of architects, engineers, or lawyers are also coming to this part of the world to practice or provide guidance, whatever. So I think that, you know, Hong Kong is very important in that case of the providing talent, you know, to develop, you know, a very sustainable economy.
Jada, from your perspective.
Listen, I draw similarities. This is what the UAE and the region also has been driving, learning again from the best and from regions and countries that have been at it. For us to be able to deliver on very ambitious and wide-ranging strategies and visions, the core to that is the human capital. And so prompted by the pandemic, you've seen huge transformations happen to basic things like labor laws and visas to give people who come here a much stronger sense of belonging and desire and sort of assurance that they can stay here for the long term. So even from like residents and expats also, we're noticing that the education attainment is going at a faster pace. And again, the type of education is aligning with sectors that are key and, you know, to delivering on the strategy. So going into STEM education, going into higher education to enable, because this will be the people who will deliver and will take the country to places. And so, you know, the best thing about this is interchange of expertise and knowledge and learning. So there is somewhat of a competition, but it's a healthy one, and there's room for everyone to play here.
Yeah, Salman, I mean, the capital markets here are the sort of very early beginnings of their life, whereas very developed. That's the expertise, I assume, that a lot of people are looking for out of Hong Kong.
Well, I think absolutely. I mean, all these strategies and growth stories, they are nothing if not for people. And the most important thing is it is not just attracting talent, which used to happen before, it is now retaining talent as well. I think that is where the government here as well has started thinking on those lines, and, you know, all these golden visas that have been given to actually retain that talent, that is very, very important, because that is how you run the show. I think earlier on there was a mention that Dubai has a lot of similarities with Hong Kong. We hear that Dubai has a lot of similarities, for example, with Singapore as well. Well, okay, that is a very good thing, because we are learning all the good things from all the experiences that have been gained in those markets, and now trying to replicate them, and dare I say, better them. And that will all be done by the people who are here, because at the end of the day, they are the ones who will have to run the show. So I think that is the key.
That's the ethos of sustainability, right? This very forward, long-term view and thinking about generations to come.
Because sustainability is not just about climate change, and this is sometimes lost, I
100%,
believe, in
absolutely.
the discussion. It's a
Absolutely,
much
it's
broader...
also about the people.
Absolutely. Got time for one more question from the audience? Please, John.
Thank you. In finance, particularly, in the West, the world used to be very neatly divided in terms of risk management between emerging markets and developed markets. We're seeing obviously quite a lot of changes in global economic flows, the geopolitics. How is the GCC Hong Kong relationship sort of reflecting some of those changes? Because there's quite a lot of thinking. Risk is basically a very different beast to what it used to be. And Hong Kong has a sort of foot in the emerging markets and very strong basis for the sort of connectivity with the developed market financial centres. It'd be very interesting to hear from sort of both sides in terms of how that risk, how thinking on risk is changing and how it's evolving.
Patrick, you mentioned risk earlier and risk assessment, and risk is part of the investment equation throughout. Has the assessment of risk changed?
Well, I think within our businesses, our approach to the risks that we're worried about are different. So bring it into the health space, tragedies like diabetes and things like that are something that in the West you had to worry about as an actuary. You have to worry about a bit of it in some markets, but big picture, there's a different type of risk being run. Longevity is actually the thing that if you're sitting in the political space, you're going, there are going to be people who are now going to be extremely old. I think Hong Kong statistics I was reading last week is that there's going to be a very large number of people who are relatively aged, and they've got different needs. They're going to need different forms of insurance and state support in order to provide health. So I think risk changes. You've got to be country agnostic and actually properly look at the risk in front of you, not the risk you think is in front of you, right? And I think that's the technique of shedding this kind of geographic focus and actually looking at the underlying risk, because that's the business we're in. We're in the business of pricing that sort of stuff. The financial services risk and market risk, obviously volatility comes into that. And I think the stability of the peg, as we've heard before, is really, really important in terms of dampening volatility. And so obviously those are important measures that governments take to make sure that they try and, where they can dampen the price of risk, that they take those actions.
Andy, the risk profile change or the risk assessment and the calculation for risk changing?
Oh, for us, I don't see any change in the risk appetite framework, and we are still really focused on this Hong Kong or Asia to the GCCE corridor, and we take this as it's part of our DNA. That is what we really want to do, and we are really focused in these markets.
Jen, risk?
Listen, definitely the risk will continue to change. It'll be very volatile. We were just speaking about it. The region, in fairness to it, we've proven to be very resilient. We've learned to be adaptive and agile. Sorry if I keep repeating the word. The fact that we've been diversifying away from just concentrating on one sector and hydrocarbon means we have more sectors that should be prone and to these constant volatility and challenging backdrop that we have. So that goes a long way. And people's risk, in addition, like their risk averseness is getting better with risk awareness. So people are able to differentiate. They are seeing the trees from the woods, if I've got it accurate. And it depends, if they're in there for the long term, then they're willing to wait it out, because this short-term view does not make sense when it comes to investment. So if they get in, they have to have that long and far-sighted view of what's in it for them.
Final word to you, Salman, on risk.
Well, I would say the same thing. See, just like with business opportunities, the risk keeps evolving as well. The whole idea is understanding, appreciating, and then understanding how you can mitigate that risk. And then it also boils down to the appetite that you have as well. Here, of course, the markets are at a different level where Hong Kong is in terms of maturity. The Middle East, or GCC in particular, is getting there. They are learning the best things that have already been offered. But the idea is from those learning points, how do we better ourselves? And how do we actually preempt those things and mitigate, or rather not repeat the mistakes that have already been made in the past? So I think that's the whole idea in terms of understanding, and that's how that's the sign of maturing markets, I would say.
Great. On that note, I'm afraid we have to wrap up this session. Just remains me to thank our speakers, Salman Mir, Shada Olbono, Andy Poon, and Patrick Bowes. Please join me in thanking all of our guests. Okay, in this session we're going to be looking at the technology ecosystem of Hong Kong and areas of collaboration, cooperation and investment between Hong Kong and the GCC. But first, to open the session, I'd like to invite our Middle East senior Middle East associate, Freddie Neve, to give us a briefing on some of the research we've been doing around the Middle East pivot to Asia. I mentioned it in the earlier session, where we're seeing soaring trade between the two soaring. I've asked Freddie to narrow down his look at the research this time around to Hong Kong and GCC. So before we get underway with our second panel, please welcome Freddie Neve.
Thanks, Michael, and good morning to all of those who have joined us here today. My name is Freddie, and for most of my professional career, I have looked at the Gulf's relations with the wider world. And at Asia House, I lead on the think tank's research and outputs in the Middle East. And much of this has focused on driving greater commercial and political engagement between Asia and the Middle East. Indeed, accelerating economic growth between Asia and this region right here is emerging as one of the defining geopolitical and geoeconomic trends of our times. And Hong Kong is key here. And today, I will outline why the Hong Kong Gulf Corridor is primed for growth. Hong Kong Gulf trade has grown considerably over the past decade. As this graph shows, trade has more than tripled since 2010, rising from $4 billion to $13 billion by 2022. And there are several synergies that underpin why this trade has surged and why it is primed for future growth. Firstly, Hong Kong and the wider Greater Bay Area has technological expertise in several sectors that the Gulf is developing to fuel its own economic diversification, with digitalization, logistics, and sustainable technologies being key examples. Hong Kong's established financial services ecosystem, coupled with its large capital market, also provides the Gulf with financing options to fuel this economic diversification. And the Gulf's growth trajectory and growing influence in the world also offers Hong Kong diversification opportunities in addition to its traditional partners, as well as abundant investment opportunities from the Gulf's numerous sovereign wealth funds and family offices. Secondly, Hong Kong's geographic location provides the Gulf with a gateway for investors and opportunities in the Greater Bay Area, China, and wider Asia. And this picture here highlights just how central Hong Kong is to the Greater Bay Area. A $1.9 trillion market with 9 major cities, Macau, which is a special administrative region, and over 86 million people. And as Asia House research has highlighted, as Gulf-China trade expands, Hong Kong will likely benefit through its position as a gateway into wider China. Indeed, our research has found that Gulf-China trade has surged by 33% over the past year, rising from $188 billion in 2021 to $250 billion in 2022. That's $250 billion. Hong Kong's free trade agreement with ASEAN, as well as its application to join the Regional Comprehensive Economic Partnership, or RCEP, means that it is also developing into a gateway into wider Asia. As you can see from this map, RCEP is huge. It represents around a third of global GDP, a third of global trade, and a third of the world's population. And as highlighted on our previous panel, as Gulf sovereign wealth funds look increasingly eastwards, and as Gulf trade with China and ASEAN rises, Hong Kong will benefit as a recipient of sovereign wealth fund investment, as well as a conduit for some of these trade flows. Furthermore, Hong Kong's reopening after COVID-19 has led to greater commercial engagement between Hong Kong and the Gulf, as recently demonstrated by Hong Kong Chief Executive John Lee's visit to the Gulf. In February 2023, Lee visited both Saudi Arabia and the UAE. And during this visit, Lee said that both the Hong Kong and the UAE would have much to gain from a free trade agreement. Indeed, the UAE is Hong Kong's largest trading partner in the region, at a time when we're seeing the UAE push for more bilateral trade agreements in Asia, recently signing significant deals with India, Indonesia, and Cambodia, and this year launching negotiations with Vietnam, Thailand, and Malaysia. Lee's tour also saw a total of 13 MOUs signed, creating new avenues of cooperation across several sectors. One example is that Hong Kong and Saudi Arabia will start negotiations towards an investment promotion and protection agreement, with the aim of strengthening bilateral investor confidence. Hong Kong and the UAE signed a similar agreement in 2019, and our research has shown that Lee's tour has led to a deepening in Hong Kong Gulf financial services cooperation. One example is that Hong Kong Stock Exchange has agreed with Saudi Arabia's Tadawul to explore dual listings and collaborate on fintech and ESG. And this is happening at a time when the Gulf is undertaking concerted effort to grow and modernize their capital markets. Since Lee's visit, we've seen further cooperation with the Hong Kong Monetary Authority, also known as HKMA, enhancing its cooperation through a targeted program directed towards Gulf central banks. HKMA has recently visited the UAE Central Bank to discuss easing cross-border payments, encouraging trade in China's currency, the RMB, and also cooperation on virtual assets and ESG. And pictured here is a similar visit by HKMA to Riyadh in July 2023, where discussions were held on financial infrastructure development, open market operations, and fintech. So, in terms of the future drivers that Asia House is monitoring, in terms of Hong Kong Gulf trade, one of the most significant has to be the internationalization of the RMB. Asia House research has shown that the RMB has now overtaken the euro as an international trade currency. And RMB usage in international trade now stands at almost 6%. And in 2024, we expect the continued internationalization of the RMB. Also, as China Gulf trade continues to grow, there's going to be greater demand to use RMB in facilitating this trend. And as we explored in the previous panel, Hong Kong's goal to grow as an offshore center for RMB positions it well to facilitate this new type of trade. Secondly, as Gulf capital markets expand and modernize, and cooperation between Hong Kong and Gulf stock exchanges deepen, we could see opportunities for Gulf and Hong Kong firms to dual list on each other's respective stock exchanges. Thirdly, digitalization, which we've seen is central to the Gulf's economic diversification strategy, as well as complementarity to Hong Kong and Greater Bay Area expertise on digitalization and associated technologies, will likely develop trade further between the Gulf and Hong Kong. And we've seen, for example, Huawei, which is headquartered in the Greater Bay Area city of Shenzhen, in particular benefiting and being active in the Gulf's building out of its communications sector. Fourthly, as we shall explore in the next panel, Gulf Asia sustainable cooperation is rising, with Hong Kong offering expertise in sustainable technologies, green buildings, and the green finance required for the Gulf's energy transitions. COP28 President Sultan Al Jaber has visited Asia frequently in the run-up to COP28. And with less than a month to go before this pivotal summit, we expect COP28 to further drive Gulf Asia sustainable cooperation, with Hong Kong acting as a potential bridge. We will be exploring growth in the Hong Kong Gulf Trade Corridor, as well as growing trade in Asia and the Gulf more broadly in our upcoming Middle East Pivot to Asia report, which will be published in early December. So stay tuned for that, and thank you for listening. Back to you, Michael.
Thank you, Freddie. Now to move on to our second panel, which is titled Hong Kong's Technology Ecosystem, an Enabler of Sustainable Growth. And in this panel, we're going to examine Hong Kong's advanced technology ecosystem and the opportunities it presents for GCC businesses and investors. As we did earlier in the session, we're going to look at it from several different perspectives, including sustainability and sustainable technology, and also fintech and how that enables sustainable growth. We're doing so at a time when most countries are pushing digitalization to drive growth, and when sustainability, the energy transition, and the race to zero is the very top of the political and corporate agenda. We'll look at sustainability cooperation between the Gulf and Hong Kong, including green finance, which is one of the huge issues and one of the huge challenges of our day, and Asia-Gulf collaboration on sustainable technology and renewable energy more broadly. And as I said, we'll also look undoubtedly at the fintech scene, which the Undersecretary talked about in his speech, his remarks earlier. So let's get underway with the panel. Joining me now is Jennifer Chamis, who's MINAT Regional Head of Sustainability, Global Commercial Banking at HSBC. Antonio Jimenez, who's Managing Director and Vice President, Trina Solar, Middle East and Africa. Alvaro Albella, who's Managing Director of Technology and FinTech at Gulf Capital, and Ali Abul Hassan, who's co-founder and CEO of Tap Payments. Please welcome our speakers to the stage. Thank you all for joining us. Antonio, I'd like to start with you. Trina Solar, Chinese company, founded in China, but successfully expanded in the Gulf and doing a lot of very interesting things here. Is renewables, is this the core opportunity in terms of the sustainability picture between the Gulf and Hong Kong and Asia?
Yeah, thank you very much. Yes, I'm working with Trina Solar. Trina Solar is a Chinese manufacturer of different technologies of not only solar like PV module, also storage, and now even hydrogen. So we are the technology providers. And the company is one of the leaders in the market, and we're present in over 100 countries. Many of them here in the Middle East. And I think the region has the interest to grow in sustainability. We have seen very large solar park that has been built both in UAE and Saudi Arabia, and they have the interest to grow and to grow in renewable that are happening. This is a good opportunity for any solar company to be here and to bring the technology, because they have the interest, they have the land, the resources, a lot of solar resources, and also the capacity to finance this project. So for any solar company or any renewable company that is interested to grow, this is an excellent place.
Jennifer, HSBC, of course, huge Asia bank, big, extensive interests in the Gulf. What trends are you seeing in terms of the connectivity, especially around sustainability?
Yeah, absolutely. And thanks for having me. From an HSBC point of view, we're seeing three trends really in the sustainability space in the Asia-MENAT corridor. One of which were already highlighted, which is importing of sustainable goods. So whether that's solar panels, EVs, batteries, all of the different technologies that are being manufactured in China or elsewhere in Asia being imported into the region to really serve the large-scale infrastructure projects, as well as the transition that the region is going through. So that's trend number one. Trend number two is those companies actually coming in to establish themselves more than just a distribution hub, but actually establishing their manufacturing in the region, closer to be able to export east and west, particularly the west, and serving the west. Again, they're setting up large-scale factories to, again, EVs, solar panels even, and different components, and actually starting to think about manufacturing in the region, particularly in the UAE, Saudi, and Turkey, is what we're seeing. And last but not least, we're seeing a lot of Asian corporates bidding for and participating as contractors, EPC contractors, consultants, into those large-scale infrastructure projects that I mentioned. So actually not just participating as as bringing in the components, but taking a leading role in those projects that, again, are happening in those sites of Saudi, UAE, and Turkey. So lots of engagement across the corridor in the sustainability space. I think both regions see this as a big opportunity, and for us as HSBC, having a legacy business in both regions, we definitely have been really excited about what's happening.
It's clearly top of the agenda and very
Yes,
high,
absolutely.
and it's happening on the ground. Ali Abul Hassan, the state of play of GCC technology sector overall. There's a lot happening there. There's a lot of emphasis on building and growing the tech sector. You're in the midst of it. Is it happening? Is it happening at a pace?
Definitely. I would say the past few years, that's just going on a boom, I would say, in the GCC and the Middle East in general. With the opening also of the Vision 2030 in Saudi, it kind of gave another boost that started introducing a lot of new technology companies that are coming out. The ecosystem of, let's say, investment and capital into the GCC market and the region has developed a lot in the past, let's say, 7 years.
Yeah.
It's, if you talk 10 years ago, it was almost non-existent.
I was going to say, that's the pace of change has been quite remarkable. I mean, tech is moving very fast, but the pace of change and development of tech in this region has been nothing short of breathtaking.
True.
Yeah.
And it's, I think it's the start. Still, it's still in the early stages. There's a lot more to come with it. I think the region is in, let's say, the very premature when it comes down to the potential of the region. We happen to be in a region that is very liquid and very strong with purchase power. So it brings a lot of attention for companies to serve the market, even though if you talk at the GCC is around 55 million population, but if you look at the purchase power coming from this population, it's pretty sizable.
Yes.
And it's getting the interest of not only companies that are based in the region, but companies from other parts of the globe, whether it is from the east, such as Hong Kong, mainland China, and other parts in Asia, along with the west, looking into the region and investing more into the region here.
All right, let's look at it the other way, the GCC appetite for investing in tech, especially sustainable tech, sustainable technologies in Asia. What trends are you seeing?
Yeah, so thanks for having us here. As Gulf Capital, we have been investing in the region for almost 2 decades now. And our thesis started with investing in companies in the Gulf, but obviously helping them grow abroad. We've done that systematically into other areas of the Gulf, but also into Asia, into Europe, and further afield into the US. Actually, out of 20 transactions that we've done as initial platform companies, we've done an additional 20 bolt-on, so acquisitions, and about 70% of those have been in Asia. So Asia has been a hunting ground for our portfolio companies to grow. Why? Because, as Wayne Gretzky, those of you who like ice hockey said, you have to skate where the puck is going to be. And so looking at those trade flows.
I'm not sure how widely ice hockey's followed out here, but it's okay.
There are actually 2 big teams in Dubai, in ice hockey. So, but yes, using that sort of reference to trying to understand and looking around the corner, you have to go where the puck is going to be, right?
Yeah.
In our case, it's looking at where the economy is growing, where the flows are growing.
Yeah.
I think Freddie mentioned that before, right? there's been a 3 or 4-fold increase over the last 10 years. I was reading yesterday's another economic publication that was saying Dubai, UAE itself, the trade flow with Hong Kong went from 400 million to almost 10 billion between 1995 and 2022. So, you know, that's a 25-fold increase. You want to be a part of that, you know, that party as a private equity investor.
Yeah, and technology is central to this, isn't it? That's one of that's the trend you're seeing.
And that's what we see absolutely in our portfolio, whether it's within health tech, whether it's within fintech payments. We're constantly looking eastward to be able to acquire and incorporate technology.
Yeah, Jennifer, you mentioned the 3 trends of Asian investment here. Are you getting any sense that the reverse is true, that there's interest by your clients here in looking at Asia, Hong Kong and beyond for investment along those sort of 3 trends you identified?
Yeah, absolutely.
Yeah.
I think particularly, for example, the sovereign wealth funds
Yeah.
And other investors in the Middle East are also looking to diversify away from the region. I think they're diversifying in terms of sectors, but also in geographies, and we definitely see the interest kind of being on both sides. During this year in particular, we've done a lot of engagement across the corridor, so sending delegations into Asia and getting Asian delegations into the Middle East. So we're seeing more and more that trend happening, and with COP28 on the horizon, it's a fantastic opportunity to convene because everybody will be here, all eyes on us in the UAE. But I think we're seeing this as a fantastic opportunity to continue to foster relationships across the corridor and having good engagement between, you know, both sides, absolutely.
Yeah, and I'm glad you mentioned COP because we do need to talk about it. It's clearly just a matter of weeks away now, isn't it?
Yes, it's 16 days away. We have a
16 days, 4 hours.
Exactly.
Counting.
We have a countdown in our lobby with a tree, not a real tree, but a tree that's been growing as we approach COP. So it's just, it's coming, it's near us, and yeah, finally.
Yeah, absolutely. Antonio, on the technology front, there's obviously a lot of tech from your company coming from China into the Gulf. Do you see the reverse happening? Do you see investment coming from the Gulf into Asia along the renewables front?
Yes, indeed. The industry of the renewables is not only the manufacturing of the product, it's also the developing of the projects, implementation, construction, and there is a lot of knowledge and a lot of expertise in how to develop a solar plant, how to finance a solar plant, or how to operate that through different companies that are very strong. And they have those companies, Masdar, Aqua, they have been working here for a very long time. They have a lot of a big track record, and now they are expanding all around the world, especially in Asia. So we see that coming back
so
and
it's
investing,
going back the other way.
Invest on the part of all the value chain, the part of developing, financing, constructing the solar plant. In that, the region is a powerhouse. They are exporting now that knowledge to the
And we talked earlier about the pace of change of development of technology here from sort of from next to nothing to where it is now. Where do you see, what areas of tech do you see that the next phase of innovation coming from? I know Saudi's got a huge focus on AI, for instance. It wants to be one of the world AI leaders in 15 years or something like that, or maybe earlier. So you look at tech, you're in the midst of it. What sort of tech are you looking at? Where's the next big player going to come from?
So considering that we're a company that simplifies online payment acceptance, our insights are mainly seen with consumer spending, I would say. Where do those companies that are growing, coming out, and what sectors they're actually serving their customers? From that perspective, today, the majority of tech that's coming out, it's mainly towards consumers. It's not our visibility, at least, from a tap payments perspective, because we're very long tail specific.
Yes.
It's not on the industry side of things of where we see how the investment is coming from a country level into those companies that are building industries, I would say. But from a perspective of tech companies that are out there that we see and we serve, it's mainly serving consumers. That's what we see, because that's, I would say, the short term. Yeah. The short term that's happening today, and that's where every tech ecosystem starts out. You start serving consumers first, then the innovation comes in. Now, there is investment coming in into other than, like when you talk about AI, data, cybersecurity, all of those type of, let's say, energy, let's say even, let's say green farming and all of those type of new renewable or sustainable technologies that are coming out.
Yes.
But our visibility to that is mainly from the consumer side, so I can't comment on that piece.
Right.
And what we do notice from those companies that it is emerging into more sophisticated, more advanced, let's say, type of tech companies. What I mean by that, sophisticated, I don't say that today it's not, but if you look at, let's say, if you go to Silicon Valley, if you go to the 90s, the type of tech companies that were coming out from that region was mainly consumer-centric, I would say. Today, it's more about healthcare and it's more about other types of innovation. I believe GCC is still in the early stage of that.
Yes.
From, let's say, top level, top, not from a bottom, government-wise, there is investment into those different verticals, but it's more strategic to build this ecosystem here in the region with collaboration of other markets that have developed such. So you see it in the East, along with GCC, investing a lot into AI, basically. But from tech companies that are going into the market, that are actually growing and sustaining with an addressable market, it's still in the early stage where it is more towards commerce, spending, purchase power, the normal trade that is out there. What we notice about the links that is happening with Hong Kong and mainland China is that it's already been, let's say, noticed. So you either see companies from China set up in Hong Kong would come and build presence here in the GCC to serve the customers of the GCC. The ones who are building infrastructure, whether it is in telecom, whether it is in other types of infrastructure projects, you see a population from China coming to the region. And whenever you see anything above 100,000 in population, it is noticed here in the GCC. So whenever that happens, that becomes a new market, because then you see there is another trend where there is people from China or Hong Kong that are actually spending and who are living here, and they're looking to trade back to China, basically. So there are different angles into it.
Okay. Are the investment choices that you and your clients and investors are making now on the tech space, is it driven by sustainability? Is it driven by e-commerce? Is it driven by AI? Is there a particular tech that you see as attractive to investors out of Asia at the moment?
Well, I think the way we're looking at it is following on what Ali was saying. You have to also, follow the trend, but also what is it that the markets are requiring. And so on the consumer side, yes, there's been obviously that current, and I would say, a little bit disagreeing with my fellow panelists, I think the Gulf has adopted some technologies, and has been traditionally an adopter of technologies, but in many cases, they've then transformed it or localized it. So I think there are several very good examples of that. Whether it's in transportation, Karim, I was an investor in Karim on the board, and they were much quicker to localize to the needs and requirements of the local markets, whether it was in Saudi Arabia, Egypt, or here, over their main competitor, Uber. And that's why I think one of the reasons why Uber ended up buying them. Or in the fintech space, and we have a lot of companies here, obviously represented by TAP, that are able to localize and make requirements for the local markets faster than other competitors. And similarly in other industries. So what we look at, rather than whether you have, so we see AI as something, as an enabler, an enabling technology, right? It's how fast, how quickly you can localize, how quickly you can respond to local market needs. And that's what we're really looking for in terms of technology adoption and investment potential.
Right. Jennifer, the sustainability component of this technology thing, there's multiple ways one can look at it. And AI comes up consistently as being potentially a game changer across industries, particularly in sustainability. Is HSBC looking at that? Are you seeing trends to invest in AI projects, especially related to sustainability?
So at HSBC, we've actually made a lot of commitments on what we call banking the new economy, with particularly the recent acquisition of SVB in the UK, as well as increasing our what we call HSBC innovation capabilities. Particularly for this region, we're seeing a lot of companies born out of this region, and we see this region as becoming more and more an exporter of clean tech to the world. So there's definitely a lot of companies born in Silicon Valley and other places that are coming into the region to serve the big oil and gas companies. But there's also equally a lot of companies that are born here that are growing really fast and getting good investor backing to then export their technologies into the world, particularly in the space of carbon technologies and agri-tech. So those are two really hot areas for this region, given that obviously we have a big decarbonization challenge, and also we have a big food security challenge that we need to solve for. So these two trends, we're seeing a lot of great ideas, great business models being born here, and really looking for really growing really fast, actually. It's surprising because as you look through the different fundraisers that these companies typically go through, the size of those early fundraising stages are much bigger for companies that are here. We're seeing a lot of interest into them. So yeah, a lot of potential, and HSBC is definitely playing a role.
Good. Antonio, the startup scene here is very vibrant, as we've heard. It's vibrant as well in Hong Kong. Do you have a sense of collaboration and increased collaboration between the two?
I see that now there is a lot of new opportunities happening in the market because this year the solar panels, the solar technology has reached a world record low, has never been this low, and this will enable or is enabling a lot of new opportunities or business model that was not possible before. So this will feed this community of entrepreneurs that in both areas that can open to new opportunities, such as in electromobility, in the hydrogen, and areas where before the cost of energy was very high, but now with the energy from solar power at a rock bottom price, it's possible, because if you start with a very cheap start point of a low price of energy, you can do a lot of things and be competitive in the market. And that this is happening now, is starting for this year, where the prices has slashed, and this is something that will enable the communities to grow, and you will see a lot of things happening. I expect to see a lot of things happening, new uses of the energy, of this cheap energy for the next years.
You mentioned earlier the ecosystem and the development of a technology ecosystem, and Hong Kong prides itself on having a technology ecosystem. Do you see differences between the ecosystem that's developing in the Gulf and that that's happening in Hong Kong and broader Asia? Are there connectivity challenges? Are there connectivity opportunities?
Well, we need to be practical by the fact that Hong Kong is next to Shenzhen also, and having that development that is out there. So we are in an earlier stage here in the GCC. We are seeing from the type of companies that are based in Hong Kong and Shenzhen that are coming to the region and help open up opportunities of what we can actually do. It's like what friend Alvaro mentioned, localizing things here is something that has been a learning experience, that what a lot of GCC tech companies are looking at. So you see what is out there, and we've seen from the type of, let's say, wave of interest that's coming from the East. It's more like on seeing things that have worked on those markets and seeing that, okay, We see some momentum here in the GCC. Let's invest into those companies that have proven in the East, and now we see it happening again in the GCC, basically.
Yeah, we talk about opportunities, and there clearly are immense, but there's also a few challenges out there. The global outlook is as volatile and unpredictable as I've seen it in my career in terms of high interest rate, persistently high inflation, growth, very mixed picture in developed economies, stronger in the emerging markets, and immense geopolitical tensions. Again, from an investment perspective, is there increased risk? How are you playing that risk? And does that direct more of your funds to Asia as opposed to standing back and waiting to see how things play out?
Great question. And yes, I would say I would tend to agree that there's higher volatility, uncertainty. Maybe it's because we're getting older, right? And we're sort of risk averse. But they're also very, I would say, positive scenarios and outlooks. One of the things that, again, coming back to sort of fundamentals is population growth, macroeconomics. So across Asia, we are definitely going to be dedicating more of the funds, or our fourth fund, we're focusing still on GCC, but probably a significant percentage of the fund, 30 to 40%, is going to be invested across Southeast Asia because of the growth perspectives varying from those out what we see in the West. Yes, there's high interest rates. Yes, there's political uncertainty. I'm from Spain, and right now, we haven't had a government for the last probably, 4 or 5 months now. So, we're becoming like Italy, I say. I'm married to an Italian, so I keep laughing at that. But maybe it's not a laughing matter. Anyway, coming back, what we see is between Dubai, just focusing now on Dubai and Hong Kong, right?
Yeah.
So they've been focusing on the political stability, openness, trade, welcoming capital. So I think those are the sort of the three big connectors between the two cities, right? So the ability to have capital formation, attract capital, the ability to, the openness of business. So how fast you can open a company here. And then obviously policies that support people coming into the country and doing business in the country. And lastly, I think, Ali was talking about sort of like, if you look at how Silicon Valley did it back in the 60s, right? Also the connectivity. Yeah. So I think those things, those four elements are key. If I'm not mistaken, I was reading yesterday, Hong Kong has about 4,000 startups. They grew by about 10% over the last couple of years. In Dubai, according to the Dubai Chamber of Commerce, it's 30,000 startups. I don't know how many of those like tech startups versus manufacturing or trade companies. But what we see there is that trade, globalization is alive and well, and that's what we need to take advantage of.
Okay. Happy to take now questions from the audience. If you'd like to ask a question, just stick your hand in the air, and we'll bring around the microphone over here. Mizuki. Covered.
Thank you again, Michael. AIIB established an operational hub in Abu Dhabi earlier in the year with the focus on being closer to the Middle East and Africa. Similarly, there are very strong government-to-government ties between China and sub-Saharan Africa. So I just wondered from the panel on the private sector side, particularly with the focus on sustainable finance, are there opportunities being explored for investment more wider than the GCC in the region and certainly into Africa?
Perfect one for you.
So for AI in particular?
On the private sector side, AIIB is obviously a multilateral agency investing into the Middle East and Africa. Is there a private sector, Hong Kong, China / GCC opportunities for collaboration to invest in Africa, for example?
Invest in Africa. Yeah, I mean, absolutely, right? So I think investment into Africa, to be honest, we're not, as a bank, we're not hugely present in Africa, so we don't really get a lot of visibility. But from what I hear from our customers that are looking at Africa, there's definitely a lot of projects, particularly in the sort of forestation space and biodiversity. So lots of large-scale projects in that area. That companies from the GCC at least and from Asia are looking to continue to build that infrastructure and participate in these long-term projects in Africa. So I don't know if that answers your question.
I mean, your focus is largely Gulf and emerging Asia, Southeast Asia now, but does Africa come into your equation at all?
So yeah, we have been investors in North Africa.
Yeah.
And obviously there again, the macro fundamentals in terms of population growth, GDP per capita growth, et cetera, we see that as strong drivers. But for now, our key focus is on those two areas of the Gulf of Southeast Asia.
Okay. Next question from the audience. Yes.
Thank you. Just coming to the green finance, sustainable finance, we've seen Hong Kong looking at tokenized green bonds as a sort of new innovation. What are the opportunities for expanding green finance to wider emerging markets through the sort of cooperation between the GCC and Hong Kong, particularly, you know, in the innovation space where clearly we need to see more products, more flexibility with how sustainable finance can be raised and deployed.
Dave, I have to put that one to you.
I'm happy to take that.
Yeah.
That's definitely a key focus of mine. So sustainable finance, first of all, just to kind of to set the scene and make sure everybody is understanding what it means. There's currently really two types of products in the market that exist that apply to the various instruments that we provide, whether that's bonds or loans or any other kind of working capital facilities. The two types of products that are available in the markets are sustainability-linked products as well as green finance or social finance products, use of proceeds-based really. So on the sustainability-linked side, that market has developed largely in the last few years, 2-3 years in the UAE and in the region. We've done this year about double in the commercial bank for MENAT HSBC, what we did last year. So lots of growth in kind of that area. And this is where we embed sustainability KPIs in our financing structure, and they need to be material and core to the borrower's business. So that's been growing. A lot of the banks now in this region are offering sustainability-linked products, and it's pretty important because it doubles down on the messaging, it really sets the scene, it really embeds sustainability ambitions within financing structure. On the green and social side, use of proceeds based, so this is when you are financing, whether through bonds or loans, a very particular investment that is either green or social. So you look at a list of eligibility criteria, and if your project falls under those categories, then we can extend those use of proceeds-based products. In this region, again, given the amount of infrastructure that's being built and the ambition that the region has, there's both, again, on the green and social as well with, you know, hospitals and schools and all types of social activity going on. There's been, again, a lot of green investment pouring into the region. So in both cases, the market has really developed. Banks locally have become a lot more you know, embedded and understanding of the requirements that are set globally in the markets on what sustainable finance is. And I think we're really pleased to see kind of what's happening. Of course, it's not enough, and of course, there's a lot more to be done, and particularly in what you said, the innovation space, where there's still a lot of uncertainty in technologies. The projects are very long-term, like green hydrogen. We were part of the big green hydrogen NEOM facility a few months ago. So those projects are not easy to finance, but they are definitely needed, and banks like ours are looking more and more and keeping an open mind to find a way to ensure that the capital is deployed in the right places.
Because, I mean, it needs to be pointed out, if it's not known already, that to finance the energy transition, we're looking at the sort of deployment of capital which this planet has never seen before. It's totally unprecedented.
Yeah.
So even though progress is being made, much more rapid progress is required, is it not? To even make a dent in some of these goals. Yeah.
Absolutely. I mean, and this is why COP28 is going to be really important if we just go back to that. I mean, it's we're going to do at COP28, the global stock take will be happening. So this is where we will know how much of a gap exists between the countries that have expressed ambitions, net zero ambitions, and where they are today. So it's really a pivotal COP, obviously happening in a region that is high emitting. So obviously there's been some controversies around the world in terms of COP28 being hosted here, but I think given the importance of the need to transition high emitting sectors, it's part of the story, right? We need everyone to really participate on the journey.
Yeah, and Mara, we talked about it, touched on it earlier. My sense of where the energy transition was on boardroom agendas was that during the pandemic, remarkably high, to my astonishment. I thought it was top of the agenda. But it slipped off as cheap money disappeared. From your investment perspective, is the sustainability component of investment top of the list for you? Second, third? Has it changed?
Absolutely, I think it's still top of the list. And although it might not be grabbing headlines as before, our attention span in today's information age is quite limited. But some of the largest projects in terms of, for instance, a hydrogen plant in Saudi Arabia with Aqua and Air Liquide, from the US, that's, I think, an $8 billion investment, right? That's still going ahead. You have other focus areas in that energy transition happening across the Gulf. NEOM, for instance, for all the, again, headline-grabbing titles on Weather the Line, et cetera, but there are strong commitments in terms of trying to have those areas of development being net zero, for instance, water desalination and the ability to provide water infrastructure for the port city or for other areas of NEOM. We've seen what has happened with water desalination in the Gulf and the effect it's had on the marine biodiversity. And so there's a strong mandate. There's a vision, as Ali was saying, very strong directed vision in terms of how not to do or commit the same mistakes of the past. And so using technology and using innovation to actually bring and to further those net zero and those sustainability goals.
Yeah. Ali, can fintech help with the energy transition? Is that one of the agendas you and others who are starting up?
So we can help towards the end, I would say, after the adoption is there, taking mainstream to move it towards consumers, I would say. At least that from our perspective as a company. Yeah. We've dealt with clients in Saudi where they are using smart cities and using solutions for automating payments, and you see it with the IoTs, and then the adoption of AI comes into it. But what I mean by that is we come towards the end where there is an adoption. There are companies that are now rolling it out to the market. And then you see payers trying to utilize those services, and it ends up being done in a green setup. So if you end up going to a place where it's all people drive, let's say, green energy cars that are, let's say, run with a similar setup as Kareem, those type of transactions need to be built in a specific way. Yep. And when you utilize any type of, let's say, service that is done for the public using different types of IoT services, then that's where we come into the picture. So we come towards the end of basically consuming those services by the market. Yep. And that's where fintech would come in from a payment perspective. But of course, there's many different types of fintech that we're not exposed to. Yes. But that's where I would give it from our perspective.
Yeah. Can we go now to COP28 just before we wrap up and what the panel is expecting from it? Mindful that Hong Kong is one of the sort of leaders in terms of provision of green finance. I would have thought that any major development at COP28 will have a direct impact on Hong Kong, given, if nothing else, its involvement in providing finance and being a facilitator of green finance. So, Antonio, for you, you're here. You represent a Chinese renewables company. What are you looking for at COP28?
I mean, of course, you see any commitment to continue advancing into the decarbonization of the world, including not only the energy, the electricity by itself, the energy sector, but also in terms of the decarbonization of the car industry. Any commitment in that direction will be good for everyone and will be really, really welcome.
Yeah. Ali, I want to go to you now, COP28. I know it doesn't necessarily fit into the payments space, but you're here. It's obviously a huge global event at a critical time for the planet. What are you looking for?
Basically, I believe that seeing where the positioning of where the direction that is happening globally and from the GCC, how the trends are moving towards that type of event, and seeing where the next steps of, let's say, direction where the world is moving, basically.
Yeah.
Those type of events, when they take place, they help you give you or shed light on which direction to go after.
Yeah.
And that happens from the topics that are being discussed, what are the things that are being given attention to, the agendas of investment, where to go and focus on. So examples like when we talk about AI, we've been hearing it for the past few years.
Yeah.
It's something that we're investing in. Okay, what are we going to hear that is new? Is it continuation of such things, or there is more into new verticals? So a few years back, and we see the momentum of it coming in AI, and then there is the sustainability or the part of it that is coming in right after that, started investing a lot into it. Let's see, I'm looking to see what's coming next, basically.
As an investor in this region, as an investor in Asia, what outcomes are you expecting out of COP28, and is it likely to have an impact on your investment decisions?
We have to be cognizant of those trends. That's one of the point that I would agree with my fellow panelists here, Ali. We have to follow those. In our case, we're very happy. One of our portfolio companies, Jidya, is the payment provider for COP28. So we're fully supportive.
So good for you.
And we'll see what else comes out from that we have to be aware of.
Yeah. Okay. Jennifer, final word to you. You've got the countdown in your lobby, so I have to let you have the final word. In terms of outcomes, and particularly in terms of outcomes for the investment community, and what are you looking for?
So I think for us, I think it's fantastic that we're hosting COP28 in this region. Like I said, I'm expecting a lot more of the oil and gas companies to step into the agenda. They're welcome at this COP. It's different than other COPs. We're expecting a lot more private companies also to be participating at COP this year than what COP has been historically, which is mostly country delegations coming in from a governmental point of view. So I think the private sector is going to be hugely present. What I think we will also see, hopefully, is addressing the gap that we talked about earlier in terms of being able to finance either long-term infrastructure projects or climate tech in a way, and innovation. So I think we should be hopefully seeing, and this is really aspirational, but I think we will see it, more announcements on finance vehicles that are going to be there to support the technologies that we need to build these solutions, right, for us to be more on a pathway of 1.5 degrees. So I think it's hugely exciting. Like I said, it's all eyes on us in a few weeks. But we have, at least HSBC, has a lot of engagements planned with our corporate clients and our government clients, and we're really excited to see some action come out of COP.
Right. Afraid we have to wrap it up there. It just remains for me to thank our speakers, Jennifer Chamis, Antonio Jimenez, Ali Abel Hassam, and of course, Alvaro Abella. Thank you all for joining us. And thank you for being with us today. Hong Kong is going through a reboot. It's a very exciting time for Hong Kong, major capital market, major financial center. doorway, gateway to China and wider Asia. The Gulf, I'm here often. It's the most exciting time I've seen in this region ever. It is just extraordinary what's happening here, and it's a great privilege to be able to host this conference talking about Hong Kong and the Gulf. So look, please have a good day. Please join us for lunch. Hope to see you again very soon. Thank you very much for joining us.